Hello, and welcome back to another Talking Freight, brought to you by Ceresys, the transportation management company. This week, we continue our Talking Freight series on all things inbound freight management. You can watch all of those videos in this series and all the future ones by simply going to the playlist with a link that you'll find right in our description. We also have tons of downloadable resources and blog posts on the same subject, and I'll include the link to all of those material as well. Now, a direct appeal to logistics executives. If you're looking to save costs on shipping, take a look at inbound. Depending on the industry and size of the company, a business can spend more than 40% of its annual freight budget on inbound shipping, according to the Aberdeen Group, a research firm out of Boston. A more efficient inbound freight program can minimize delays, save money, and even reduce confusion. 75% of companies surveyed by the Aberdeen Group report that inbound freight management is a key focus point. In one example, a company with over $18 million per year in inbound freight costs reported paying invoices from over 100 carriers, despite having negotiated preferred terms with 5 carriers and stipulating their use on each order. Logistics and supply chain organizations face 3 primary challenges when it comes to gaining the upper hand on inbound shipping spend. So today, let's talk inbound shipping challenges. Number 1, lack of visibility. Logistics executives are constantly requested by operations, sales, planning, purchasing, and accounting groups for more accurate and timely information on inbound shipments. Today, identifying what's in transit, where it is, when it will arrive, and how much it will cost requires piecing together information from internal paperwork, carrier websites, and phone calls. A time-consuming, inefficient process. And that's just for one shipment. A comprehensive report might take hours or days to prepare. In addition, transportation managers who must rely on predominantly manual processes to track and trace freight find themselves answering, "It gets here when it gets here." This lack of predictability has ripple effects throughout the company, leading to excess inventory, sales obstacles, and variances in the company's performance of their supply chain. In most organizations, the lack of reliable, easily accessible, real-time data means that they must reach out to suppliers for shipment details to get carrier name, carrier tracking number, or past bills of lading. This is an inefficient and labor-intensive process, and ultimately, a costly way of dealing with inbound shipping. The number 2 challenge, lack of control. Most companies have developed carefully optimized plans and routing guides that specify how users and suppliers should ship material. However, they have little control over whether these guides are followed, even though they are paying the freight charges. They must rely on their suppliers and employees to execute routing instructions and guidelines, without any means to enforce these optimized plans. This is less of a problem with outbound shipping spend since companies typically have direct control over their outbound freight. But most purchase order terms are ex-works, where the buyer pays the inbound shipping costs and assumes the risk for the delivery of the goods. The buyer, in this scenario, is dependent upon the supplier to follow the supplied routing instructions. Unfortunately, shippers do not consistently follow routing instructions due to their focus on shipping products to the hundreds of customers on a daily basis. The bottom line is that when a supplier fails to adhere to the shipping request, such as carrier selection, service selection, account number identification, special instructions, notifications, and a whole lot more, the buying company bears the additional freight expenses, as well as the costs resulting from delays in received purchasing items, supply chain disruptions, and a lack of visibility into the shipment. Costs that usually cannot be traced back to the product level for accurate costs of goods calculations. In addition, once items are en route, the buyer has no means to make changes, whether reacting to external events such as a weather event or the need to split a shipment for separate delivery destinations. It may be weeks or months before the increased costs are visible because the invoices for the inbound shipping must be entered and paid before finance can generate a spend report. Even then, all one knows is the total cost. To break down the data in more detail requires going through paperwork manually, logging into multiple carrier shipping portals, and compiling the information in various different ways to analyze and find the root problems. So, unless a specific question arises or someone makes a project of analyzing the inbound shipping spend, the true cost of inbound shipping remain unknown. The third and final challenge, rising freight costs. According to that same Aberdeen research group, on average, surveyed businesses experienced an increase of 14.5% in truckload rates, an 11.5% increase in LTL and ship rates, and a 15.1% increase in international air rates over the last 2 years. Clearly, external shipping rates are outside the logistics manager's control, but that means that careful management of the inbound shipping ecosystem is of greater importance. In addition to increasing visibility and control, as I just discussed, logistics managers are forced to look to other areas of savings, such as reduction in staff size, smaller IT services budgets, an increase in the centralization of shipping. However, such changes may only exacerbate the problem. So how do shipping managers control outside costs with fewer internal resources? Well, conduct a thorough freight data analysis to see where money has been lost, so you know where to focus. Implement a robust transportation management system. Work with a logistics service provider who can help develop a custom inbound shipping and routing program, working one-on-one with your suppliers. In conclusion, clearly, managing inbound shipping is challenging. Fortunately, there are now practical, managed services that enable companies to manage processes, increase visibility, and gain control of their inbound shipment costs. A complete managed service solution combines expertise in complex logistics and with an on-demand system for better transportation management. But you need to know what you're looking for when it comes to automated tools, systems, and integrated services when choosing a provider or building an inbound freight management program in-house. Well, that's it for this week's Talking Freight. Thanks for joining us for another episode. Hold up, before you go, make sure you click over here to subscribe to our channel, click over here to view all the inbound freight videos in our series, and click here above my head to go to Cerasis.com.